Hi, this is Joseph. In this video, I'm going to review one of my trading strategies and the way I execute trades. So if you're considering using my trade copier service, you're probably wondering how I trade, the size of the stop loss, what are my typical take profit targets, what currency pairs do I trade, and for the most part, you're probably wondering how I trade overall. What type of trading strategy is it? So it's a manual trading strategy. It's not an automated trading system. I personally manually execute each one of these trades, and it really comes down to identifying certain patterns and using specific charts. Right now you're looking at my point and figure chart. So I actually use point and figure to day trade. A lot of people that are somewhat familiar with point and figure, they normally associate point and figure to the larger time frames like the daily, the weekly, the monthly, and then they typically will use or think of point and figure as a method of identifying price targets. But it can be used for day trading. I've been using it for day trading for many, many years, and it's very, very effective, especially when you use it every day, the way I do. I've been trading for 20 years. And I'll show you the other chart that I use to confirm everything that I see here on the point and figure. So what you're looking at right now is the euro dollar. This is the euro dollar, and I want to show you a couple of different trade opportunities. So this one had an entry at approximately 1.1720, and then we, based on the amount of information or the data that I have here with the point and figure, I can usually determine some kind of take profit level. And then sometimes when we're in an uptrend, it may give me a second entry opportunity for another trade. This was earlier today. You can see that the entry was at approximately 1.17, I believe it was 93. And then the take profit level was a 20 psychological level. Usually when I get to the end of an uptrend and it's about to run into a major level of resistance, I'm going to trade to psychological levels. So you can see that it's really effective, very easy for the most part. It can be difficult to read for those who are not too experienced using point and figure, but I'm going to show you how I combine this information here on the point and figure along with my futures chart, the euro futures, and I'm also tracking and counting the waves and tracking the amount of volume and the participation that's available at certain times to give me these qualified trade signals. So again, I execute each one of these trades manually. I have to look at all of this data. I have to confirm that I'm actually executing and trading in the right direction. So again, it's not an automated trading system. I've been using this trading system for 20 years. Let me show you what my other charts look like. So now what you're looking at is my euro futures chart. You can see volume down here. This is not tick volume. I get that question quite a bit. People will ask me if I'm actually using tick volume like the MT4 4 platform, and that's not as reliable. You want to see true volume, futures volume. Again, this is the euro futures. There is no dollar paired with this, but it's the exact same thing and the same price pattern and behavior that I see when I execute trades off of the euro dollar. So let's go ahead and open this up. I'll show you one particular trade this morning that lines up with that point and figure chart that I showed you. So remember that point and figure had a couple of different opportunities. There was a trade down here, then there was another one this morning. And what I'm looking for, and this is a particular setup that I use every day. So during the start of the London session, that first hour is always a pretty important moment for me. It's a very important setup because very often it's going to lead to some kind of a breakout. So sometimes during the first hour, you get a lot of activity. This is actually where my cursor is moving. This is the first hour at the start of the London session. This is the euro futures, but it works the same way with the pound. I do the same thing with the pound futures. So this is the first hour. And in this case, you can see that there was quite a bit of volume, and that candle there, let me go ahead and open this up one click. It stayed above or held above that support low. Again, this is a 1 hour chart, so this goes on for about 14, 16 hours here. And you can see that there was a clear attempt to move lower, but a very poor close, obviously, in regards to a possible bearish move. It reversed, turned around, went back up, and closed really strong towards the highs. And then that was on the first hour, along with additional and an accelerated move in volume here compared to all of the other candles, I guess not excluding the previous day. at this point. That's what I'm looking for. I want to see more volume. I want to see more participation, and I want to see a move that could likely turn into a head fake. Now, this is something that a lot of people get stuck in. They see a move to the downside at the London Open, and they'll trade it to the downside, and then they get stuck, and it's reversal. They may be trading off of a smaller time frame. I prefer to trade off of a 30-minute or a 1-hour chart when I'm day trading. So if you're interested, again, in using the Trade Copier service, you probably want to know what time frame I'm trading off of, what are the size of the take profit levels and the stop loss that I'm using. So again, you can see that some of the trades will pay 20 pips, some of the trades will pay 80 pips, some of them will pay 90 pips. A few weeks ago, we were trading the pound dollar using the same methodology, point and figure setups, along with the futures. And a lot of the trades were coming in at just about 60 pips to 90 pips. And that's, of course, when it's in a trending environment. I cannot promise that I'm going to be able to do that every single day because, again, it's just not it's not always going to be available. There's going to be times when it moves into tight ranges of consolidation and price will stay there for, let's say, a day or two. So you just have to wait. You just have to wait it out. That is usually one of the biggest challenges for inexperienced traders is that they don't know when to stay out of the market. They continue to keep hammering on these trades and they grind away at their account. They lose a lot of money and then they spend a lot of time trying to earn back the losses. I don't do that. I'm a very patient trader. I wait for my setups to come to me. I can clearly see what's going on in the market. I can see the behavior. I can see the structure. I can see the amount of participation and the volume that's coming back into the market at any given time. So again, this is my breakout strategy at the London Open. I do the same thing with the pound dollar. The pound dollar also provided an opportunity this morning. And you can see that this is exactly what I do almost on a daily basis. Every day, it's not always going to look like this. Tomorrow, after the first hour at the London Open, it may not give me an entry on the very next candle. Sometimes at the London Open, the first hour, the next few hours, it may continue, and these candles may, or the bars, may continue to trade inside of the first hour range at the start of the London session. And that's also a signal in itself. It sort of tells me to stay out of the market, wait until we get a better opportunity, and then very often, as the New York session starts to pick up, there's a lot of participation. There's more traders coming into the market at that point, and then we get some kind of a breakout. Very often, economic data will create some kind of an opportunity. So as far as the take profit levels, again, it could be a 20 pip trade, it could be a 50 pip trade, it could be a 90 pip trade. Every trade is a little bit different. As far as a stop loss, the stop losses in this case are going to be really controlled. You can clearly see where it is, 20 pips, maybe 30 pips. I never use a stop loss larger than 55 pips. But even though I use a stop loss, initially I have certain strategies that would require a 55 pip stop loss. If a trade is likely to fail and I can identify that, I won't let it run into the 55 pip stop loss. I can usually close down the trade minus 30 pips, minus 27 pips. I have not had a loss of 55 pips in a long, long time. Again, I'm very, very patient with my setups. So by being patient and watching and timing the markets the way I do, again, I've got 20 years experience doing this every day. I can see when it's not going to work, when a trade isn't going to work, and I'll close down that trade right away. I'm going to protect my capital. I'm going to protect your capital. Each and every one of these trades that I execute goes into my personal trading account, and I know that it also goes into your trading account when you're using my trade copier. So I'm doing my best, again, to protect our capital and to earn as many as many pips as we can on these profitable trades, and to manage these trades as they're open throughout each trading session. Some of them will pay, they'll hit their target maybe in about 30 minutes. It really depends on how active or what's behind what's driving price, what's behind it. Is it economic data? Is it a comment? Other trades may take 2, 3, 4 hours to actually hit their targets. Every day is a little bit different. Every trade's a little bit different. But again, as far as the structure, and if you're wondering what kind of trading system, is it technical? Do I trade the news? I really don't trade the news. I used to trade the news when I first started trading. It was fun. I would scalp. I would jump in and jump out. But too many things can go wrong. Broker manipulation. So I stay away from all of that. You don't have to worry about me exposing, your capital and your trading account to dangerous situations like that, where I can't control the outcome. If a broker is going to freeze the data, it will definitely have a negative impact, and I know that. So that's why I stay away from trading around certain news events. There's plenty of opportunities for us to make 40 pips, 50 pips, 150 pips on a single day. Again, I cannot make 150 pips every single day. There are days when I can make 350 pips in a single day, but I can't do that every day. It's only when the market provides the opportunity. So hopefully this will give you some kind of an insight and some general idea of how I trade. It is a very technical system. Again, I am personally managing each one of the trades. I execute each one of these trades. I confirm each one of these trades, and I don't walk away from the trades. I stay there and I continue to manage the trade from the time I get into the trade until it hits its take profit level. So if you are considering using the Trade Copier, if you've got any questions about my trading system or any questions about the setup on the Trade Copier itself, let me know. I'd be more than happy to help you. If you do subscribe to the Trade Copier service, and if you run into any installation issues, we're always available. We can use TeamViewer to log onto your computer, and we can assist you with the setup and also check your settings to make sure that it's executing and performing correctly for you. Thanks for watching. I hope you had a good trading day.